Hey everyone, Rob B here with Rob D. And this week on the Property Podcast, we're going to deliver some numbers to you that I really truly believe will blow your mind. The numbers that nobody else is talking about and could possibly change your viewpoint on property investment in the UK.
Welcome to the Property Podcast, where every Thursday morning property investors come to be informed and inspired. This week we are talking about city centres. The death of city centres has been widely publicised, but is it correct? We've got a contrarian view that might actually open up a once-in-a-lifetime opportunity for property investors. So stay tuned to find out what that is, as well as, like Rob said, those astonishing numbers.
And make sure you stick around for Hub Extra, because we've got something really special for you this week that you will not believe that you can use for free. It's time for our news story now, and a very interesting news story it is. The headline reads, "Stamp duty receipts soar despite the holiday." And this is an article taken from Estate Agent Today. Rob, how can this be? There's been a tax cut, yet the government's made more money. Are they having some sort of laugher?
It took me a minute to get that. That's very good. Possibly. So in March, they brought in nearly 1.2 billion in stamp duty, which is the fifth biggest single month since stamp duty took its current form all the way back in 2003. And that's 22% higher than the same month last year. Now, on the face of it, when you cut a tax, you don't expect to therefore receive more of it. But there are a couple of things that could be happening here. One is that actually this could be completely unrelated to the tax cut. It's just because of other circumstances, such as the end of lockdown, people moving for personal reasons, the uncertainty fatigue that we've talked about in the past, people just wanting to move for other reasons, and the stamp duty doesn't actually make too much difference in that, so it's just a coincidence. The other possibility is that because taxes have been reduced, that is prompting more people to move. And that effect is an example, Rob, of the Laffer curve, which you just referred to.
Yes, the Laffer curve is quite a simple concept. And the concept is that raising taxes doesn't necessarily raise income for the government. Because at some point, if you keep raising taxes, less transactions will take place. Or it will deter people from generating that said income. So an easy example here is stamp duty, what we're talking about right now. So if you have high stamp duty, it may put people off moving. And if people don't move, then you don't receive any income from stamp duty. So it's all well and good having a high level of stamp duty, but if nobody moves, then the government doesn't benefit. So by reducing taxes, or in this case stamp duty, it's encouraged possibly more people to move, and therefore more taxes have actually been generated, even though stamp duty was cut. Now, as Rob's rightly pointed out, this just could be a temporary boost, and we will see, although this isn't a new concept. And the Laffer curve has been demonstrated to work time and time again. And of course, you've got to get it right. You can cut taxes too much, and you can put taxes up too high. But if stamp duty continues to generate more income at a reduced rate, then surely, well, you'd hope, at least anyway, common sense would prevail at the government, and they would realise that stamp duty at high levels just isn't useful for anybody. It reduces transactions, which ultimately hurts the economy because people just stay where they are. So we'll see. It's an interesting piece of data. At the moment, it's only a piece and we need to see more of it. But of course, we'll keep you updated. And we'll especially keep you updated next week when we have our market update. Yes, it's that time again where we run through the most interesting news in the property world, throw in a bit of economics as well. And we all come off a little bit better and a bit more knowledgeable about what's happening in our wonderful world of property. So make sure you join us for that.
If there's been one big trend in property over the last 12 months, it has been the reported death of the city centre. Everywhere you look, all the commentary is around people moving out of the city, how rural markets are booming, how London is struggling, and how what buyers and renters are looking for has changed. So does this mean doom and gloom for people who already own property in city centres? Does it mean you should never acquire anything else in a city centre? Do investors need to be shifting their strategy? Or is this just a blip? And if so, does this create any kind of opportunity for investors? That's what we're going to be investigating in today's episode. So Rob, I think it's worth starting by talking about how the property market's meant to work. Before all the COVID weirdness happened, how were we thinking about city centres?
Well, city centres tend to get the fastest growth in a market cycle, at least at the beginning. And then you will often see a ripple effect kick in. because you have prices go up to a point where people feel uncomfortable around that pricing level. So naturally, people start to look elsewhere, and elsewhere being close by, where's the next affordable place, and that's what we call the ripple effect. So a couple of examples of the ripple effect in play would be you see London go, which it has done, and then the areas in and around London, commutable to London, then kick on in price rises. Or in the north, you could look to Manchester, and Manchester has done well recently, and because of that, areas close by are doing well, Greater Manchester as a whole, and Stockport being a great example of that. You know, an area that we've certainly got an eye on that's benefiting from the growth that the city of Manchester has seen. And there are a few classic examples of the ripple effect. So, up until COVID, this was all playing out quite nicely. But then COVID came along, and yes, it changed a lot in the world for a lot of people, but it also seemed to have changed the property market.
Yeah, I referred to all that commentary about how city centres are struggling and people are moving out, looking for more space. And maybe that's exaggerated, but it's fundamentally true. And what that means is that over the last 12 months, cities have underperformed compared to their surrounding regions. And you can see this by putting two sets of data next to each other. So the Broad Land Registry data shows you what's happened in broad regions, so like the Liverpool region. But you can also look at something we often reference called the Home Track report, which looks specifically at city centres, so Liverpool city centre. And by putting those two data sets next to each other, you can see a discrepancy between what the region is doing and what the city is doing. And Rob, we picked out a few examples. All these numbers are incredible, not just the discrepancy, but also the raw numbers themselves.
So we've used the last 12 months of data from Home Track and the Land Registry up to February to understand what is happening. So get ready. These are real numbers. And no one's talking about this, which is bonkers, because the growth levels here are huge. Let me start with the city. Liverpool, as a city, is growing by 6.4% right now. Impressive, right? Considering cities are dead, that's a big number. Wait until you hear what the region's doing. The region of Liverpool, so that includes all the suburban areas as well, is growing by 16.3%. 16%! I mean, talk about a boom phase of the cycle. That is absolutely astonishing. That is incredible growth. Incredible growth. That would mean that if Liverpool continued to grow at that rate, the region of Liverpool, then property prices would double in just under 5 years. That is astonishing. But that's the level of growth that's happening right now. So there's a whole story here about what's happening in the country right now with property prices. And we will talk about that in weeks to come because this needs to be talked about. But let's just pause for a moment and reflect on those numbers. The city is growing at 6.4%. But the region is growing at 16.3%. So nearly 10% difference in the same area. Rob, these are big, big numbers. And it's not just Liverpool where this is playing out. Manchester, the city, is growing by 6.6%. Number one in the country right now, as far as cities go. But the region is 12.8%. Leeds, the city, is growing by a healthy 5.4%. But the region is 10.2%. Rob, the numbers here, in two respects, are huge. One, the overall growth levels, which are just phenomenal. And then two, the difference.
Yeah, the overall growth levels are crazy. It's like we're in a full-on boom and no one's noticed. But crazy though that is, we'll park that and come back to it in a future week. But the discrepancy between the region and the city is huge as well, and it's huge in the wrong direction. It's not what you'd normally expect. Obviously, cities don't always grow fastest, but at the start of a growth phase, which is where we appear to be now, you always expect them to get the growth first and fastest, and that's not what is happening. Now, the reason for that, you don't have to strain too hard to understand because that's exactly what everyone's been talking about for the past year. People have been working from home, so they don't need to be in the city centre for work. People are changing their priorities and rethinking what they want. So they're thinking about having a bigger space. They want a garden. They want to be somewhere a little bit out of the thick of it. Or maybe they've been forced to move further out because of the economic impact that lockdown has had on them. So the trends and the reasons are not a surprise, but the size of the effect when I actually looked at these numbers next to each other was really surprising. But the question is, Rob, is the trend going to stay like this or is it going to reverse? Because it does now seem like things are returning to normal.
Yeah, so lockdown, touch wood, is easing. And as far as the UK is concerned, it's moving in the right direction. And people are gaining more confidence again. You only have to look at the rental markets in city centres and to see that there's interest again and people are active and looking to rent, that people are returning. And there's going to be a pent-up demand initially. But will people return in the numbers that they have before? Before COVID, there was definitely an indisputable trend that people were gravitating towards city centres. And there was good reason for that. You had the regeneration of those city centres. City centres in the 80s were a place that nobody wanted to live. Today, there are vibrant places with great atmospheres and facilities and things to do and entertainment and convenience. We live in a world of tech now, and tech and city centres go together hand in hand because you can do things en masse there. So it's no surprise that services like Deliveroo, Uber and others all started in city centres. Yes, they are expanded out, but the tech starts in cities, and there is so much that you can take advantage of, like deliveries of goods and services in a few hours, for example, if you live in a city centre. Now, not all of that may appeal to you as a listener, but you have to think it will appeal to many, many people. And of course, the ability of being able to live close to where you work is important. Now, they're all reasons why city centres were popular, but are they enough, Rob, to make it popular in the future? Because the thing we have to talk about here is working from home, or the potential of working from home. And attitudes and viewpoints have changed around that subject. So while some people will have to work in an office full-time like they did before, others will have flexibility. And some businesses are saying work from home completely. So with that in mind, it may change people's viewpoint on where they choose to live.
It might do. And for me, this is the main factor. Because the whole thing about, people want more peace and quiet and they're going to be funny about going back to restaurants and clubs and things like that, I'm not buying it. I think that's going to go back to normal quicker than people might think. But working from home is the big one. Where I think we're going to land on this is more flexibility, where most people are going to be in the office at least a couple of days a week. So in many cases, it's not going to go back to being every day. There might be more flexibility about start and finish times and things like that. But I think that most people will be in offices some of the time. The two reasons for that: firstly, as we've discovered from running a business for the last year, you kind of need to, or if maybe you don't need to, but it certainly makes things a lot easier. Some things you can do really well from home. Some things, collaboration, for example, it's very difficult. There have been so many occasions where I just go, I wish we could just get in a room and sort this out. The other is that from every survey I've seen and from everyone who I've spoken to personally, that's what everyone wants. I've come across very few people who were previously working in an office who never want to go back to the office ever again. So what does that mean for city centre property? Well, it means that on the margins, yes, there is going to be less demand. So to some extent, the trend stays because the people who are coming in maybe twice a week might be willing to do a longer commute than they otherwise would because they're only doing it a couple of days instead of every day. And they want a bigger garden and more space because they've got a family or something like that. So they maybe would have previously been in, but now they're out. But that is on the margins. There's still a lot of people who either want to live in the city or still think that on balance, it's the best thing for them to do. So for me, Rob, and you might disagree, things are not going to go 100% back to the way they were because of working patterns that I do believe will change, but they'll go a long way towards back to how they were. And these huge discrepancies that we're seeing in pricing at the moment, where regions are growing 2 times or more faster than the city centres, it just can't be maintained.
No, it can't be maintained. And while working patterns will change, some things won't. The infrastructure opportunities, the entertainment opportunities, the convenience opportunities that cities offer will remain and will continue to be attractive for people. While somebody in their 40s, for example, who's lived in a city may think, okay, now's the time to move and find somewhere with more space, that's understandable. And that often will happen in someone's life anyway. You see, cities are generally made up of a younger population. But for the younger population, do they suddenly no longer want entertainment and the infrastructure benefits that cities bring? Of course they do. That's not changed. And I think another thing that has to be taken into account with cities is, in the UK especially, they are all very different. Take Liverpool and London for an example. London is huge, as we all know. I'm not bringing anyone any news there. But because it's so big, it can take a while to get out into greener areas. So London itself, thankfully, is very green. There is loads of park space. There is loads of opportunity to feel like you've escaped from the city, even while you remain in the city. But Liverpool doesn't need that. You can live in the city, have all the convenience that a city brings, but still be in the countryside in less than half an hour. North Wales is less than an hour away. The beaches are less than half an hour away. So you're not really compromising by living in a city. When we think of cities, our natural default for most of us is to think of London and a big sprawling metropolis. But London is unique in the UK. It's the only city that you can't walk across. Okay, it would take you a long time to walk across Manchester or Birmingham, but you could still do it. Whereas most cities, you can walk from one end to the other in less than an hour. And that includes Liverpool, Leeds, Sheffield and others. And if you cycle, well then you're minutes from one end to the other. So not all cities are the same. So therefore the attraction of cities moving forward and people's willingness to live in them will absolutely be based on what the city offers, but also what's close to the city nearby as well. So Rob, although we've talked about different things here, I think we're both in agreement, although we've not yet said it, that there is absolutely a future for cities, certainly in the UK, because of all the benefits it brings, and that they are far from dead.
Completely. And it's interesting because COVID has accelerated so many trends, whereas the city centre thing is the only one where it's actually reversed the trend. But for many of the reasons we've talked about so far in this podcast, I think all the actual drivers behind the trend that was there before are still there. They just went away for a year, but now they're coming back. And what I think is interesting for property investors in this appears to me to be creating a window of buying opportunity. Because if you just go with us for now and assume that we are moving into the growth phase of the cycle, and if you believe that the drivers for people wanting to live in cities are returning, then the gap that's opened up between cities and the regions that they're in should not just be closed, but it should also reverse, and you should go back to cities leading the way. So much like the southeast of the country outpaced the north for many years, but then London stagnated and then the rest of the country is catching up again to close that gap, you could see the same thing happening between cities and their outlying regions. Unless there's some long-term structural reason for this reverse to be in place, which we've said that we don't believe there is, then that reverse should happen. So that means you would expect, over the next couple of years, growth in cities to be made up and then to lead the way again. At the same time as this opportunity exists, though, no one's very interested in it. If you've got as many Rightmove alerts set up as I have, you'll notice that properties outside city centres are getting snapped up almost instantly. And we've talked, I think it was in the last market update, we talked about examples just anecdotally of people we know who are listing their houses and selling them for more than asking price on day one. But in city centres, that's not the case. They're sticking a little bit more, which means this opportunity may be there. But if you want to get in on the opportunity, competition is actually lower than usual. And that's what we're seeing, Rob, not just on Rightmove, but in our business as well.
Absolutely. So Property Hub Invest works with investors to put deals together that are off market. So they source properties from developers. Sometimes it's secondhand stock as well. And I think it's worth saying up front that it has always and will continue to source properties in and outside of a city centre. So we have no bias here, we do both. But it's really interesting what's played out when you look at the last few years. Leading up till COVID, the stronger deals we were able to do in terms of negotiation and discount was stronger outside the city centres. So we might have been able to negotiate, say, 12% off sold prices on a particular development if it was outside a city centre. But inside a city centre, if we could do a deal, and it was hard, we would get maybe 8. So it gives you an idea. But now that trend has completely flipped. And city centres at the moment, we are back above 10%. Deals of 12%. Even conversations are happening around 14%. And that hasn't happened in at least 5 years. So it's a huge difference to where we were just a couple of years ago. Because everyone's attention is outside of city centres right now, prices, as we've discussed, are skyrocketing. And developers who operate in those areas are not really up for conversations at all of much discounts whatsoever. It's hard to do a deal there right now. Now, city centre developers don't want to give away the levels of discounts that they are giving to us right now, but they have to, because that's what the market dictates. But I don't believe it can last that long. So it's creating a window of opportunity for deals in a city centre right now. Now, you don't have to use Property Hub Invest. In fact, you can do this by yourself. If you want to use a company like Property Hub Invest, you can, but you don't need to, because you can try and negotiate with developers in a city centre yourself. The point is, the opportunity is there to negotiate. So yes, you have to be a little braver than normal to invest in a city, but you are being rewarded, and that bravery is offset by the discount levels that you're currently able to achieve. Will you be able to achieve discount levels of 12% in a few years' time? I don't think you will. Will you be able to do it in a year's time? I think we're going to struggle as well, because what will happen is a reverse ripple. This data that we've talked about won't be a secret for much longer. Nobody's talking about it. I've not seen it anywhere. No press, nothing. This won't continue. At some point, people are going to realise there's a huge gulf in difference, and therefore a huge opportunity is being created. So however long it lasts, it doesn't really matter, but the point is, it's here now. So if you previously invested in city centres and have now gone a little cool on that, then actually I would flip that viewpoint and say this is the time you want to be hottest on a city centre, because it's a really unique opportunity. I know we are contrarian with our views when it comes to the property market. While everybody's now focusing out of city centres, we're bringing your attention to it. But that's normally where the opportunity lies, where the masses are not.
Absolutely. And I think you were right, Rob, when you said you have to be a bit brave, because you do. It's that contrarian thing. It's going against the trend. And of course, you've got to come to your own views. We've set out the reasons for us having our views, but you may weigh things differently, come to different conclusions, and think that the future looks different from how we believe it looks. And that's fine. But if you do your research and think it through and you come to the same conclusion as us, then if you are brave enough to act on it, then I do think there's a really rare opportunity here. Because when you start getting into a property boom, normally it's really hard to get a deal done anywhere at all. And it's impossible to get a deal done in the best locations that you'd expect to have the most growth. This time, because of this unique set of circumstances, it's actually easiest to get a deal in the best locations where you'd expect the fastest growth. This has never happened before. It may never happen again, but it is happening right now.
So what do you do with this information? Run into a city centre and buy something? Well, no, slow down. So although we're saying the opportunity won't last forever, you still need to do your research. If you are considering which cities to invest in, well, at the beginning of the year, we talked about our hotspots and which areas offer the greatest opportunity. And yes, we did name areas that weren't classed as city centres, but we did name city centres as well. The ones we mentioned at the top of the show, Manchester, Leeds and Liverpool, are strong contenders. But there are others as well, like Nottingham and Sheffield and Derby. You've got a lot of choice. So if those areas are new to you, then start your research. But if these are areas that you're familiar with and have possibly even invested in before, you might be able to move a little bit quicker and start to negotiate with people who are trying to sell there right now. And remember, it's not just exclusive to developers and new builds. You can do this on second-hand stock as well. If somebody's trying to sell in a city centre, their expectations and their aspirations currently need to be adjusted. So while they may not be willing to adjust it, some will. So you may be able to do deals there too. But there is absolutely an opportunity. And I think it's our job on the Property Podcast to open people's eyes to the non-obvious, the things that people aren't talking about. We've done this for years now. We've talked about city centres before nobody was investing in them, like Manchester. Manchester clearly feels like a very safe bet right now. But years before it was, a hot spot and investors loving it, we were saying, look at it. We talked about London slowing down and easing off, and we possibly went a little early on that. But the fact is, in most cases, when you are willing to be a contrarian and step away from the crowd and do something different, the upside potential is a lot bigger. And you're not always rewarded, but most of the time you are. Following the crowd generally offers the least opportunity for upside. You may get upside, but the fact that the crowd are there means the largest part of it is gone. So go where the upside potential is rather than where the upside already is, and you can do great things. Whatever you decide to do, best of luck, do your research, and just become aware of what's happening around you. Look at the numbers and make your own decisions.
It's that part of the show now where we share a success story from a listener just like you. We love doing these, so if you've had any kind of success, however you measure success, it doesn't have to be huge. If you count it as a win, we want to hear about it. You can let us know on all the socials. We're at Property Hub UK. You can let us know on the Property Hub forum. You can drop us an email. Doesn't matter, just let us know. We do particularly like it though when your success story comes paired with a kind review of the podcast, like this one has from Rourke, who's left us a 5-star review saying, I've been listening to Rob and Rob since 2016 and I cannot believe it's taken me this long to write a review. I hang my head in shame. Quite right. Part of my education in property is down to listening to the podcast, reading Rob's books and using the Property Hub forum, which has given me the confidence to invest. I've acquired 3 buy-to-lets and I've recently had an offer accepted on my first commercial purchase, of which I owe a great deal to you. I wish you both the best and keep up the great content. Well, we will, and you keep up the great work as well. Brilliant progress and well done to be broadening out into commercial property as well. Hope you do really well.
So it's time for our Hub Extra. Now, occasionally on Hub Extra, we give you a tool that will make, well, you know, a small little difference to your life in some way or another, or an interesting link. But every now and again, we uncover something that we think, wow, how are we still finding these things? Like, the internet is such a treasure trove, and there's loads there still to be found. There's still loads of gold to dig out from the internet. And this week's an absolute classic. What an incredible resource. It's called Class Central, and it's basically a search engine for all the free courses that are offered on the internet, mostly from universities. And they're reviewed. Some of them give you certificates. You can learn pretty much anything, and it's absolutely outstanding, the quality of the stuff that's provided here. So if you want, for example, to learn about economics, type in economics, and you will find 369 courses on that very subject. Ever fancied an education from Stanford University? Well, you can take their Social and Economics Networks course, which is 29 hours worth of material and 8 weeks long, for absolutely nothing. I mean, what an incredible world we live in when you can access resources like this. So do check it out. We don't expect you to go and note down every single Hub Extra resource that we give you, but this is just one that you do not want to miss out on. And share it with your friends as well. It's an absolute cracker. So that's us done for another week. Lots to think about there, lots to take in. And there's going to be lots for you to take in next week, because we're back with our very popular market updates. What's been happening in the world of property over the last month? Well, you'll find out next week in the Property Podcast. And of course, we'll be back with Hub Extra on Tuesday. So until then, take care, have fun, bye-bye.
Bye-bye.